All right, welcome. This is the new AlgoSniper tutorial. In this tutorial, I'm going to show you how to use AlgoSniper and the new feature of the AlgoSniper momentum and some of the new features on the main indicator. And I'm going to show you guys a strategy on how to use it. If you guys are using AlgoSniper, you love it, you like it, go ahead and give this video a thumbs up. I would greatly appreciate it. So the first thing we're going to start with is if you double tap your phone or you double tap your screen on the mouse on TradingView, it will get rid of the bottom pane oscillator. An oscillator is an indicator that sits at the bottom like a RSI, a MACD, that's considered an oscillator. So now we have AlgoSniper, and as you can see by default, there's all of those dots and triangles and buy and sell is now removed. This is how I personally use my AlgoSniper. These are the default settings that I personally use, and it's just very clean. So to use AlgoSniper, you are going to want to set up your own personal settings. And in the way to get to the settings, you're going to see in the top left corner under whatever you are charting. This, for instance, is Bitcoin. You're going to see AlgoSniper. You're going to want to come to the settings where you see AlgoSniper here, and then you're going to want to click settings. After you click settings, you're going to see inputs, style, and visibility. Visibility you won't touch, but style and inputs are the way you can customize your use of the indicator. And we're going to go through all of them step by step. Then we are also going to go over after this, the AlgoSniper momentum step by step. And then I'm going to show you my trading strategy with the whole indicator and how you can use it together. So going to double click to remove the oscillator, but it still keeps it there. Just a little quick tip for TradingView. We're going to first go to the inputs section. So you can see style, input, visibility. We're going to click input. The first is themes and colors. You guys can change the color of everything. You could change it to the gray theme and maybe a little bit more visibility. That's up to you. I will edit this in the near future and make it better. But the cool thing about this new indicator is you can click the information. So it tells you about the indicator, what it does, and the rules of it. I will add more further information with these info symbols. But the first indicator is the sniper cloud. So what I'm going to do is I'm going to go ahead and unclick everything, and we're going to talk about one indicator at a time. So the indicator is now loading so that we've changed the setting. I'm going to click Sniper Cloud. So I personally prefer for crypto the 1 hour time frame, but all time frames can work great. And each asset you will have to backtest and mess around with and see what works best for your system or your strategy. But the first indicator is the Sniper Cloud. This is an indicator based off of volume. And you can see this white line here. If you are bullish, you want to see the candlesticks closing and holding above this white line. And as you can see here, as long as it was above the white line, it started pumping up. And you can see here, it was above the white line, it's going up, but once it started to go under the white line and lose it, it dumps. So you don't want to be long or holding any type of positioning depending on your trading system or strategy. If the price starts to close under this white line, it's likely that it probably will go down if this happens. So that's something to pay attention to. And it's good when using the indicator, although I use the 1 hour for my scalping entries, it's good to use a lot of the time frames together in unison. So the daily, the 4 hour, the 1 hour, you could even use the 30-minute, you could use the 10-minute, and it will give you a full picture of what's happening in the market, what's likely. So always use a bunch of time frames in Confluence to have a bigger picture. Because if the longer trend, like on the 4 hour and the daily, is bullish, but the short-term trend is bearish, it's likely that the short-term trend is going to be short-term and it will eventually line up with the bullish trend. So particularly, I like to take longs when the price is above this white line here. And as you can see, as long as it remains above the white line, it bounces off of its support, it will typically continue traveling up. But once it starts to break under it, you can see it dumps every single time. It'll dump every time. And you can see that it will keep you in the trend. As you can see here, Bitcoin in this particular instance, once it broke under this white line, it literally crashed. And then as long as it remained under the white line, it kept crashing. It pops above it for a little bit to reject. That's not a true flip. You want to see it bouncing as support. You see here how it's bouncing as support? That's where this white line is bullish. But if it comes above the white line a little bit and keeps rejecting, that's bearish. That's bearish. So it overall shows you the buying pressure, the momentum of the market, whatever asset you're trading. Important to pay attention to. You can see here, it broke under it, rejected it, rejected it. These could be short entries. You could be shorting, using this as short entries. Breaks under, you can see momentum is flipping. So this whole indicator system is a momentum-based indicator. Now let's go ahead and the next one, EMA-based candle color. So an EMA is an exponential moving average. And I have a setting here that will change the candles of it'll change the color of the candlesticks to be either red or green if it's above the 20 EMA. The 20 EMA, if I go ahead and add the indicator here, the 20 EMA is the basis of bullish or bearish bias. If you are above the 20 EMA, similar to the white line, you want to be looking for longs. If you are under it and you're rejecting it as resistance, you want to be looking for short positions. You don't ever want to trade against the EMAs. You don't ever want to be trading against these indicators. So the color, as long as it's above it, is green. You can see it's green. So without having to add that indicator, you can see that the color of the candlesticks are changed to that particular color. And you can also change the EMA length. So if you like the 10 EMA or the 5 EMA or the 20 EMA, 50 EMA, you could change it to whatever EMA you want. Now here is another one. This is called Algo Super Trend. I have the main setting on high sensitivity, and this kind of explains it to you. But you can see as long as the price is above this yellow line, it will act as support and the price will go up. But once it starts to break under and reject it, these are obviously short entries. You want to be shorting. You want to be looking for downside. You could see here, it held it as support this whole move. Once you start to break under this yellow line here, then you can see weakness or bearishness or a crash, or the price will go lower. For me, I like the high sensitivity, but what might be recommended could be medium sensitivity, which I might add actually to the next update here. And you can see the price will consistently trade above it. You take a look at the daily time frame here. Look, once it broke above it on the daily time frame, it bounced as support. But once it broke under it, look, a huge crash can take place. Look, you break under it, a huge crash. And not until it starts to reverse does the price actually begin to break and close and hold above it as support. Starts flipping it as support. That's when you want to go long. So these indicators help you to see what you should be doing. Should you be longing or shorting? Do not go against it. If we are breaking under these indicators, we are closing under them on whatever time frame you're looking at. The daily is very important. That will give you a very strong bias of what's likely for weeks. The 4 hours likely for like a week or 10 days. All of these are in confluence with each other. And then 1 hour is going to be like a really aggressive entry. Once it starts to break and hold above, look, you get a move to the upside. And once you start to break under it, you can see that it crashes over and over and over. You can see that when it's bearish and the price is going lower, it will use it as resistance. So you consider all of the time frames together to help you to understand what you should be doing. But the key part is you don't want to be trading against the momentum. You want to be trading with the momentum. And I'll show you that once I add all the indicators together. The next one is the sniper bands, which is probably one of my favorites. There are multiple settings here. Balanced should be the first setting, and this tells you this the 10 and 20 crossover, but you could switch it to swing. So a less aggressive stance that'll keep you in the trend as long as possible. And this is very important. So I'm going to explain this indicator to you now. So this is another momentum-based indicator. And when the bands flip red and the price is holding above when the bands flip green and the price is holding above the green bands, you want to be looking for long positions. Once it starts to break under and it flips red, you want to be looking for short positions. Vice versa. You can see that the price was holding above the bands here. It begins to flip red here. And you can see a very strong trend. The price traded under the band, and the red bands remained the entire time until they flipped, and then it started to reverse. So you never want to trade against the bands. See, a lot of people, they would have maybe longed here. They thought that was the bottom. They would have longed here. They would have bought here thinking that's the bottom. You wait until the trend reverses. And this is with the swing, but we'll put it to balance so you can see it's a bit more aggressive. Once the bands flip green, the price starts trading above the green bands, then you're going to get a move to the upside. Look, the bands start flipping green, you get a move to the upside. Do not trade above against these bands. Do not look for longs until the bands flip green. This is essentially my rule that I trade with. Sometimes I will trade against the bands if the price is breaking early, but you don't want to be trading when it's rejecting until you see proper reversal and momentum. So these indicators here are going to keep you in the right trade, and they're going to keep you from trading against the overall trend. Now, another important note regarding these indicators here is that the market, and it doesn't matter the asset you trade, but the market is always in a trending environment. This is where you have a very big move down or you have a very big move up. That's a trending environment. Or you have a choppy environment. These indicators work best in a trending environment. It works in a choppy environment as well, but the biggest and best moves that will keep you in the trend, the majority of the trend, are going to be in a strong trending move. You see this move here? There's a strong trending move here. This is a strong trending move down here. That's a trending move. Choppy, this is kind of a choppy move here. See how it's just up and down, up and down, up and down, up and down? Choppy moves happen before a big move happens. So there's either two environments. You have trending moves or you have choppy moves. And before a trending move, there's going to be chop. And before a choppy move, there's going to be a trend. So pay attention to that. But here is the thing. In a choppy environment, you could still capture nice moves, but you have to be in and out quickly because the market is not going to keep pumping up or it's not going to keep dumping down. You want to be in and out. So in a choppy environment, when you catch a nice little move, you want to be aggressive and take profits. Once you start to see it roll over and momentum start to roll over, you want to exit if you were long here. And once you were maybe short here, you start to break under here, you take a short position, it starts to break and hold above the bands, boom, you exit quickly. So in and out very quickly, when the market is choppy. In a trending move, when the market is trending strong, aggressive, you want to try to ride that trend as long as possible. The trend is your friend until the end. And when do you exit? Well, you want to see bearish market structure. You want to see maybe if you were in an uptrend, you want to see a lower high, you want to see lower lows. These are indications that the trend is about to reverse. But you will also be able to visually see when the trend is reversing because the bands are going to flip red. And that's reversing from an uptrend. When the bands are flipping and reversing from a downtrend, you have red bands, but the price begins to flip green and hold above the green bands. Another thing to note, another little tip, is that after a very, very big move, like a very big crash or a very big pump, there's always going to be a big reaction to that move. So with a very big down move, there's going to be a very big up move or a very big bounce. And with a very big up move, there's always going to be a very big down move. So big moves create reactions to big moves and reactions as well. So if the market's very small moves, very choppy, there's not going to be very big moves and reactions to that. The big moves come, the big trending moves come when there's a reaction to a very big move. So another thing to pay attention to. As you can see here, a very big crash, a very big bounce. As you see, just choppy, it led to a small bounce, a small move. Just another little tip there. And as we go along, we make our way into the indicator. Now, in the sniper bands, there's a signal. So you get a diamond or a triangle when these bands flip their colors so that you can physically see an alert or an indicator when the bands are flipping on the sniper bands. You also have the trend EMA. This is the 200 EMA. 200 EMAs are a long EMA. Now we also have with the sniper bands the 200 EMA. So the 200 EMA is this like big red line or a green line. And this is kind of the overall trend. This is the overall direction of the trend. And especially in the daily time frame and the weekly time frame will kind of determine bull market or bear market. So above this green line or the 200 EMA, which you could fine tune to whatever number you want it to be. The 200 is standard institutional level that institutions and banks use. Above it is technically a bull market. Below it is a bear market. And that works on the daily and the weekly time frame. You can see that the bear market started for Bitcoin, and this just Bitcoin. It could work for every asset class. When it broke under this 200 EMA, you can see it's just been in a downtrend ever since. Once we break above it, as you can see, it broke above it here. You can see it's a strong bull trend. So this will kind of show you the longer term trend versus inside of the 200 EMA, there's a lot of choppiness. You see a lot of multiple different types of trends. Just pay attention to that. So there's trends within trends, but you do have longer term trends and short term trends. Now we have AlgoSniper momentum reversal, and we have AlgoSniper momentum diamonds. These indicators here, when you see these momentum reversals, shows through a particular custom indicator when momentum is kind of shifting. And you can see momentum begins to shift to the down, momentum is shifting up, momentum is shifting up. And the diamonds are like kind of like momentum rejections. So you could see these kind of mark a lot of tops and bottoms. When they appear, it doesn't matter the time frame, works on all time frames. But you can see like this mark like a top, this mark the top there, this mark the bottom there, this mark the top here, this mark the bottom there. And then you have these arrows. It just shows you momentum is flipping down, momentum is flipping up. These are really powerful and great tools. You also have trend reversals. This is a strong, longer type of trend signal that you will see when a big move takes place. So you get a big green diamond here, and then you get a big move. It shows you like a longer type of trend that is reversing. So these are pretty strong signals when you see them. As you can see, they're kind of major pivots. And these are all nothing you need to trade off of. It just gives you additional confluence of momentum and what's happening, where is the market going, what's going on here. On top of that, you have the buy and sell indicator. This indicator here, I personally don't buy and sell off of it, but it can show you, sell, you get a crash, buy, you get a big buy there. It can show you a signal that this could go up significantly, or it could go down significantly. It could go up or down. So it's kind of like another buy, sell, where it shows you it's most likely going to go down, most likely going to go up type of thing. And all of these signals just appear together to give you confluence. So you want to just not use one signal, you want to use all of them together. All right, so these dots appear when you kind of have upwards momentum. The red dots will appear when there's bearish momentum, green dots when you want to kind of be in an uptrend. So when you see green dots, you want to be looking for longs. When you see red dots, you want to be looking for shorts. Once a green dot appears, that shows you that reversals are most likely taking place. And vice versa, when red dots are appearing, that's like a bearish warning signal to pay attention to. We also have the top and bottom indicator. This is the multi-divergence finder. A divergence is like when you have a bullish divergence, a bearish divergence, kind of behind the scenes. And as you can see, these bearish divergences were popping up before the market pulled back. You can see at the bottoms, you're going to see these bullish divergences appearing. And this will kind of just show you possible likely bearish signs or reversals taking place, or bullish signs that are likely to take place. It works better on the larger time frames, which you can see there's been a bearish divergence at every single top and a bullish divergence at these bottoms. So it's quite interesting. It's not something to make a trade off of, but it's something to pay attention to. And you can see the number here. There's 2, 2, 2, 3. So the bigger the number, the more likely a reversal is taking place. You can see 3 here, top. This was 1 and 2. These are possible tops and bottoms. The next indicator is the institutional money zones. I will be updating this, but it kind of shows you areas of where you could take profits, where there's going to be resistance, where there's support. So it's an interesting level. You can see here, Bitcoin's finding support here, it rejected here, key support here. It just shows you strong levels where there's likely to be some type of reverse or rejection. This is another favorite indicator of mine. This is called a mean reversion table. As you can see, when the market extends itself very high, there's likely to be a reversal or a pullback. And you can see the market overextended itself and it tapped outside of these red areas and then it pulled back. And you can see it pulled back exactly to this green area here, which shows that this could be an area that's extremely oversold. The market will probably bottom. And you can see that it kind of taps these levels religiously, and there's reversals almost religiously at the very points. And you could use them and try them on different time frames. But you can see here that it tapped this bottom. That ended up being the bottom. This region here ended up going up here. So usually it would tap from green to red, red to green. You can see when it taps these levels, there are significant bounces or reversals. So it's a really cool indicator. It's a mean reversion indicator. To explain that further, whenever the market makes a very strong move, it's kind of outside of its mean, like it's gone too far. It's like you ever walk too far, or you just gone too far and you got to come back home. That's kind of the thing. It's a mean reversion. This is the mean or the middle. The majority of the time, you or the price is going to be in this region here, but sometimes it'll reach these extremities, which it doesn't last very long. It might last over 2% of the time or 5% of the time. So mean reversion, it snaps back to the mean. So whenever you see these extreme levels, it's most likely going to snap back up, if it comes up or down. The last one for AlgoSniper is the multi-time frame indicator. You can see for Bitcoin, you have the EMA 20, the 50, and the 200. These are important indicators that myself and institutions use to determine bullish or bearish bias, whether they should be buying and selling. And you can see that it has the different time frames, 1 hour, 4 hour, daily, and weekly, and all of it is now red. Typically, when you see that, that is quite bearish. So pay attention to that. It'll have a green dot or a red dot based on whether these EMAs are crossed over these particular time frames. So that way you can have a whole gauge over the market where the EMAs are in particular time frames of that particular asset you're looking at. Now, to put it together, we will add the Sniper Cloud. We will add the Super Trend, the Sniper Bands. We will add the Trend DMA. We will add the Momentum Reversals, Trend Reversal, and we'll just use that for now on top of the mean reversion channel. And for me, I love to use the 1 hour time frame. I love to use the 1 hour time frame. And what we can see here, just in this particular instance here, and we're looking at Bitcoin, is Bitcoin had crashed here. So Bitcoin crashed here. And if you look at the indicator, you're going to wonder, okay, where should I buy? When should I get back into long? And you can see it tapped the mean reversion indicator, which is just one thing. And we're starting to see momentum shifting up. These are like kind of reversal signals that a bottom is potentially coming. But once we begin to break and close above the white line, the yellow line, and the band flips green, that's for me is a long position. And you catch a nice little move and it's choppy. So we're looking to get in and out quickly. And then boom, you start to see bearish momentum signals beginning to appear. And then the price begins to close under here, the white line. And then as soon as it closed under this white line, boom, it crashed. So we would want to have exited when we see momentum shifting, or you could be aggressive, exiting at the top, near the top, after you see it like a rejection. Now, this could be the same if I was looking for short positions in this choppy environment. I see Bitcoin has overextended itself in this instance. It's at an extreme level. Okay, it's potential area to short. After a big move, we're starting to see these momentum indicators shifting to the downside, but we close under the white line, the bands flip red. And let me go ahead and update the super trend. We're going to put it on high sensitivity. You start to break under the yellow line, boom, you get to move down, and then you can take profits once you see a rejection. You see how it's like bouncing up, you see momentum is beginning to shift up. That would be your exit. Now for a more trending move, here you have it, Bitcoin flipped red. So we don't want to be longing here. We don't want to be longing here. We want to wait for it to break and hold above the yellow line, the white line, the band flips green. We're long, long, long. And then we start to see it beginning to close down. But here, notice we're above the 200 EMA. So we don't want to just go ahead and panic sell. We want to see the overall trend, what's happening. And we try to ride this out as much as possible. We end up catching it up to the top. And then once we get to some extreme level after a very big move, it's breaking under, the bands are flipping red. Now that's the 1 hour time frame. Look at this big crash. There's a very violent downtrend for Bitcoin here. And you don't want to long until there was this is the 4 hour time frame. You don't want to long until there's a sign of a bottom. So we're beginning to see, okay, momentum is beginning to shift to the upside. The price is starting to break and close above the white and yellow bands for the first time. Notice this entire crash, it didn't do that. And we start to break and close, but it ends up rejecting. So you could have gotten in and you start to see it rejecting. You start to break under here. You could exit for a tiny loss, maybe break even, but then it attempts it again. the price breaks above the green bands, the bands flip green, you break above and close above the white line, the yellow line, you start holding above it, and look, you get an uptrend. And once you start to see it a lower high, you start to see these bearish signals, you could potentially take profits and exit. Now at the top, this recent top for Bitcoin, Bitcoin started to form lower highs. It got to an extreme area. This is the 4-hour time frame. But once we start to break and close under the yellow line, the white line, the bands are flipping red, we want to enter a short position. And then the bands are starting to flip green. This is where we take profits. And the same condition keeps being met. Keep shorting, keep shorting, keep shorting. But notice this, if you would have maybe shorted here or shorted here, you don't want to exit until the price starts to show some reversal signs where it starts to break into the red bands, starts to close above the red bands. The bands are now closed, the price is closing above the yellow line, the white line. That's when you want to exit. This will help you to ride the move as much as possible. And this works for all assets. So this is essentially my trading strategy with the indicator. And to be very succinct and straightforward, get to the point, I'm looking for longs when the price breaks above the green bands, the white line, and the yellow line. This is what I'm looking for longs. As long as that condition is met, I'm looking for long positions. If that condition is met, I'm not going to take any long positions. If I'm looking for short positions, I want to wait for the bands to be red. I want the price to close under the yellow line. I want the price to close under the white line. Looking for short positions. This can also work on 10-minute time frame, smaller time frames, larger time frames. It doesn't matter, but it's something that you will have to test, something that you will have to practice with, back test, find out what strategy, what system works for you, what time frame works for you. I personally like the 1 hour, but I also like the 4 hour and the daily. Those 3 time frames, when I look at them together, will help me to have a bigger picture to understand what I should be doing. Now, here is the new addition to AlgoSniper. This is called AlgoSniper Momentum. And if you go to the settings, you don't really need to mess with anything at all. But basically, we have this indicator that shows like kind of a wave. It's a momentum wave. And on top of it, this bottom pan here, see it goes like red to green. That's the money flow. That's kind of the strength of the market. And this red and green area shows like overbought, oversold levels. And this will also help you to define and see divergences if you know what those are. And that is for a bit more advanced understanding for advanced traders. If you don't know what those are, you could look up bullish divergences, bearish divergences, and you'll begin to understand them. But I pretty much keep everything as it is. And essentially, let's just be very frank, very simple, straightforward, get to the point. When the price is moving up, you're going to see that this thing is bright green. When it begins to flip gray, that means momentum is beginning to weaken. It doesn't mean bearish or sell. But you can see that when the momentum starts to roll over, look at called the very perfect top of Bitcoin. You see when it begin to flip gray, the momentum beginning to flip over, and look, momentum starts flipping red, got really red, and then the price started to break down. So you follow the momentum after a very big move up. So like, let's just say we have a very big move up, we're in big profits. We're looking to exit. So when do we exit? Well, we exit when we see momentum is beginning to wear out. And you can see here it's beginning to wear out. So that would have been a good exit just off of this indicator alone. Now, these symbols here, these show a few things, but essentially these are exhaustion, these are rejection indicators off of certain indicators like MACD, RSI that are beginning to appear. So these are essentially, let's just keep it very simple, bearish signs. Signs that momentum is beginning to reverse. And you can see all these signs popped up here and then the price reversed. And now look, the price has come into this extreme level here and the market's trying to bounce here. You're starting to see exhaustion signs. Look, the price dump, exhaustion signs here, and look, you bounce up. Now the price is beginning to show the same signs and the price is kind of bouncing up. And you're gonna see the same thing here. Look, the price crashed all the way down. You can see momentum is beginning to shift. You have the exhaustion indicators here, and then boom, you get a pump up. And at almost every single major top or bottom, you're gonna see, look at all these like reversal signs appearing at the bottom. Momentum is beginning to shift up and boom, you get to move up. Same thing here, look, momentum beginning to shift down. And before price goes all the way low, you can see momentum had come all the way down. All of these reversal signs appeared here before this top here, before this crash. So The point of this indicator is to help you to see momentum. So if you're looking to get into a long position or a short position, you want to see momentum get to an extreme level where you can see when it comes near the green or comes near the red, that's extreme. And you want to see momentum rolling over. So the market is always moving and undulating in the way of such where it's always kind of going up or down, up or down. Sometimes it pumps up, obviously, but the market's always moving like a wave. It's moving like a wave. And this momentum indicator here, AlgoSniper momentum, helps you to visually see that wave. And when that wave is coming down, you don't want to be holding long positions. You want to take profits when that momentum is rolling out. And you can see here, you see how the market pumps up, but momentum starts to roll out. And see how like the market moves down aggressively, it moves strong because it has strong momentum with it. It doesn't just pump up forever and nothing goes down forever. And so when you see the market, when it's crashing, you want to see that momentum start to kind of like fade out, beginning to flip bullish. And this will help you to see that. That's the whole purpose of this indicator. So you could see the exhaustion of a trend, exhaustion of a reversal. So exhaustion means, let's just say you're trying to run up a hill and you've run up a hill 3 miles, you're sprinting. And at some point, you need to stop, you need to take a break. That's what exhaustion is. So when the market's pumping up, you're going to see that buyers get exhausted. They are running out of power to push the price. They're running out of coins maybe to buy or money to buy. And they stop buying. And guess what happens when they stop buying? The price falls down. The same thing happens with this indicator. It's showing you when these buyers are running out, when they're getting exhausted. You can see these sellers here. They're getting exhausted. We bounce up. The sellers are starting to get exhausted here. And if you switch the time frame, you can start to see it more in depth. So we were just at the 1 hour. Now we're at the 30-minute. Now you can see there's exhaustion and the price is beginning to reverse to the upside. So use this in confluence with AlgoSniper to help you have a really good idea of when you should be longing and shorting. And if you don't trade against the indicator, this will reduce a lot of your losses. It'll prevent revenge trading, and you'll probably win a lot more trades than you do losing. Let me know your thoughts about this tutorial in the comments below. I appreciate all of you, and stay tuned for more updates.